Do a couple of CTAs, post a link. Just a few minutes, we'll be getting started, folks. Just takes me a minute to get going and getting everything going on YouTube. All right. Do this here. And we are live. About as live can get. All right, let me just share my screen here. Brian, good morning. How are you? Just want to share my screen with everybody, and we'll be getting started in just a second. Literally in just a second. Timothy, good morning. Good morning. It was good to hear from you last night. Glad to hear about those dividends. Dave, Cam, good to see you. Robert, Jody, infinitely. I hope everybody is doing fantastic today. I actually overslept. I have a theory. I have a plan. I'm trying to stay up an hour extra and and wake up an hour extra because I figured the later I do these videos, the more people will watch them. My cold is better, Dr. Serena. It's just, I hope that everybody's cold sickness this year is no worse than my cold. Let's put it at that. Krish, good morning, good morning, good morning. Now, before we begin, just want to remind everybody, we have a few things going on here. This will be the beginning and the end of my link posting here. So we have my VIP room at 11 a.m. And we also have a replay going on today of, you guessed it, our 100th and 10th win celebration. I hope you guys can make it. Check out the Trading Pit if you haven't seen it yet. It's very, very cool. It's my coolest development in 2023. I posted the link for that and for my VIP room. Remember, it's Thursday. VIP room is at 11 a.m. today. Okay, let's get into it. I know a lot of folks are here. So earnings. We still have earnings. We're still in the middle of earnings season. There's a lot of stuff going on. Let me ask you guys, would it be better for you if I do these videos right around this time instead of half an hour earlier? I think most people prefer a little later, like around this time. Welcome, Scott. Welcome, welcome, welcome. I usually do them about 7:30, but I'm thinking of doing about 8:15 around that time. Anyway, just give me your feedback. But I figure what's the point of being too early, right? So today you've got ADM, net. Keep an eye on this stock. I think this stock is going to pop. Net. We got pins. All right, that's a lot of yeses there. All right, all right. We got Affirm. Keep an eye on this stock. This stock is expected to move 17.2% on the option. So if the options don't move 17%, howdy, Glenn Jr., 10 right. All right, all right. We got different opinions here. So I guess you guys don't care too much. Bradley. All right, all right. We'll figure it out. We'll figure it out. But I want to make sure you guys, we get the most people here. Thank you, Richard. You're so kind. I appreciate that. Psychic crystals. Well, that's what I'm thinking, West Coast people. But I don't think a lot of West Coast people watch this live. I mean, it's 5 a.m. there. Let me ask you guys, who here is from the West Coast right now? Let me know. Just I'll continue talking, but let me know who here is from the West Coast, okay? I'm just out of curiosity, who here live is from the West Coast. I got to say, if you guys have insomnia if you're here live from the West Coast, but I appreciate you being here. So Expedia coming out with earnings. COP coming out with earnings. A lot of large caps. And then tomorrow it kind of ends with Pepsi. It fizzles out. After tomorrow, we're going to have about 75% of all earnings for the quarter. And I'll be doing an earnings review tomorrow in the VIP room. And you guys already have the link. Wow, you guys are amazing. Dedicated bunch. Dedicated bunch. All right. So we got earnings. We're digesting Wynn, which had earnings yesterday. Uber, which had earnings yesterday. CVS. Market is digesting a lot. The market right now is kind of flat. I wouldn't really say this is negative. I would just say it's kind of flat. Anything that contains the Dow within 100 points is flat, and the Nasdaq within 40 points is flat. This is just random trading action. There's not much there. I'll talk about consumer staples in a bit. Robert, my God, 4 a.m. Jeez, how you guys do it, I don't know. But anyway, the market's opening up a little bit lower, but I wouldn't really, I wouldn't really make much of this. Don't try not to take a random situation and make it into a non-random situation. That's what I'm trying to say. That the market's random enough without us adding our own 5 cents to it. In terms of Fed data, we got jobless claims and Fed speakers. As you noticed yesterday, the Fed speakers haven't been that instrumental because the Powell kind of let the air out of the bag, if you will. Wow, Adam, look at you. Maniac. 4 a.m. Whew. How do you do it? I don't know. But we pretty much know that there's not going to be a rate cut in March. Now everybody's talking about whether there's going to be a rate cut in May. I don't know yet. I don't know. I knew that March was silly, like silly. But May, I don't know. May would be the earliest, and I'll probably know by March, and I'll give you a really good opinion on that. But we're not there yet. Now we have a jobless claims report. Now I want you guys all to pay attention to me. Raj, how are you? Now you see this number, it's useless. Why? Because in the entire 2 years, this report has been around 200, low 200,000s. Whether it comes out at 215 or 185, it doesn't mean anything because it's been really, really stable. Matter of fact, this report is so useless that if this report was to come out at 10 o'clock, I wouldn't even wait for it to trade. That's how useless it is because it's been incredibly consistent. So unless this number is like 300,000 or 120,000, it will not have any impact, I promise you. Aside from that, we got natural gas report and wholesale inventories. The bond market. Remember what I told you. Yesterday, the bond market was down half a point. Today, the bond market is already opening up half a point lower. Folks, listen and listen good. This will be a very important thing that I'm saying right now. You see how we're breaking below this level right here? If we break below this level today and break lower, we're going to start heading into this level here. If we start heading into this lower level here, which I'll extend this trend line, we're going to get a lot closer to breaking this. And if we break this, interest rates are going to, A, stay higher longer. B, it'll start putting a lot of pressure on the market. C, the other thing I don't like is the fact, and I always point this out, whenever we see a pullback, I never ever will like to see the second high lower than the first high, especially when you're going into a downtrend. This is bad. And I said the same thing, by the way, just so you know, for the record, I said the same thing about Apple. See that? Lower high, and now we're struggling in this area. And the stock is not performing like the rest of the FANG. My point is, when you're looking at this area right here, always look at the context and look to see if the last prior high was lower. Going back to TLT, you could clearly see that the last high is lower. When you see a swing high, if it was a swing high and when we pull back, I expect to retest. But when you have a second lower high, all these buyers that got excited here are gone. They got out already. So now we're waiting for more of a shakeout. This is more of like a confirmation of a shakeout, like a lower, like if this was a 1, 2, 3 pattern, this would be a higher high. This is a lower high. So I'm expecting this to break down. If that's the case, to me, it will appear that the stock market will struggle as a result of the bond market breaking down. Because folks, I hate to say it, but we're still in an inflationary environment. We're not in a deflationary environment. When we're in a deflationary environment, there's an inverse relationship between the bond market and the stock market, but we're not in a deflationary environment, meaning bonds aren't going up. When bonds go up, interest rates go down. We're not there right now. Matter of fact, I don't know if you saw the mortgage rate. Did you guys see the mortgage rate a few days ago? It hit like a 7-year high. So the fact that bonds are going down right here says interest rates are going higher. This means higher interest rates. Remember, lower bonds, higher rates. Higher bonds, lower rates. They're inverse. They're completely inverse of each other. Excuse me. So again, I'm not happy with what I'm seeing here. And if you expect the bond market to come down a little bit as I am, it's not going to be good for stocks. Okay. Looking at the NASDAQ, we'll just take a look at NASDAQ first. NASDAQ is swinging higher. I'm going to tell you guys right now, this rally is becoming more and more concentrated in fewer stocks. Also, notice and I brought this to your attention, volume has been going down, not up. We're not getting the commitment that we saw going up to this rally right here. Look. And folks, I know we only spent 20, 30 minutes together in the morning, but I tried to make this really worthwhile. I'm trying to give you guys a lot of stuff. You could send your recorded live video to the West Coast and early so they could see it. Well, we do, Bradley. It's live here on YouTube. You just have to go to the tab. But I appreciate you saying that. Maybe what I'll do is I'll repost it on Telegram. But thank you. That's a good tip. So you see, folks, how right here when the stock market here. Let me go closer. Okay, you see how right here. This is really important. You got to pay attention. It's the nuances. It's the nuances that you have to be concerned about. See right here, look at volume. It's going up into this area right here. But then look what happened when we came in here. It started cooling off again. And when we rallied here, what did it do? It didn't do anything. Volume is below average. This line right here is average. So we're not even seeing average volume right now. Even though sentiment is good, there are more stocks breaking down. If you look at the blue chips, which we will see right now, they're also making a swing high, also on lower volume. But you could see this is not a strong upside move. So we got to be really, really careful right now. Like, we got to be super, super careful. I don't like the fact that volume has been going down. Matter of fact, volume has been going down. See this right here, this high? Volume has been going down since this level. Look, talk about divergence. And it's one thing to see divergence with indicators, but it's another thing to see divergence with volume, okay? You see that? Oops. See that? Look, volume peaked. Oh, God. For some reason, it doesn't want to stick. Okay. Well, let go. All right. There we go. Okay, so you see that? Right. Oh, God, I can't get this thing to stick. Come on, stick already. All right. So you see right here, volume is going, it's like a piece of gum. It's stuck to your shoe, right? Thank you, Walter. So you see right here, this was an all-time high. And when we went up here, started cooling off. So I'm very concerned that this whole area here is not what it seems to be. Now, what else is telling me that? Well, let me show you what else is telling me that. This is the number of stocks in the NASDAQ 100 that are trading above the 200-day moving average. This is going back 20 years, okay? Look at where we're at right now. So I ask you a question. How often in the last 20 years have we stayed above this area? Not very much. Now, we could stay here for a while, but typically once we get here, we don't get that much directional momentum. So be careful. Be very, very, very cautious. The bond market, I don't like the bond market. I don't like the volume the last couple of weeks on the stock market after it made a swing high. I don't like the momentum levels on the NASDAQ. And most importantly, I don't love the fundamental news that we're seeing. Also, I believe this rally is very concentrated. Let me show you what I mean. I showed you this yesterday. Remember yesterday I showed you the number of stocks making 90-day highs versus 90-day lows? Well, I want to show you again the same thing. So this is, remember yesterday, let me go back to yesterday. One day ago, previous day. See, this was at, let's go back here. Got a lot to talk about today. Okay. So let me just go back one day. Okay. See this number, 150? That's the number of stocks making a 90-day breakout yesterday. The number of stocks making a 90-day breakout to the low side was 9, okay? So 9 and 150. Now look at it today. 23 stocks are breaking down, not 9, but 23 stocks as we're making a higher high, okay? 269 are making a 90-day breakout. That's a bit too much. a bit too much. And at the same time, you have more than twice as many stocks breaking down. And I'm finally starting to get stocks on my hit list to the downside. Okay. So I know sometimes when the market technically looks really great, we have to look at the inside. And when we look at the inside of the market, we can get a much better gauge of what's really going on. Okay. So again, we're lower a little bit today. Bonds are down. We're not seeing the volume I'd like to see confirming. There's no major news. Earnings are okay. Let's talk a little bit about global economy. Okay. So Walt Disney came out with really good numbers. I like that stock. We've been talking about that stock. U.S. trade deficit increased once again. Consumer credit increased by 1.56 billion in December, weaker than expected. These are not good numbers for the economy, folks. Um, they're really not. And Russell and the small caps are not participating in this rally. So I gave you 4 reasons why the current rally, I believe, is not a good one. Fed Governor Kugler said Wednesday that although inflation is displaying clear indication of deceleration, she's not prepared to start lowering rates. Wow, what a surprise. Neil Kashkari, he just can't keep his mouth shut. The officials prefer to observe a few more months of inflation data. Yeah, I agree with him. So they're being honest. Collins emphasized the need for additional evidence indicating a return to inflation. She suggests that such cuts might occur later in the year. Yeah, she's right. Might. But stop this. It's 18% chance of a 25-point basis cut. We know that it's just not going to happen, and this is where it'll stay, which is what I predicted 2 months ago. Initial jobless claims are today, unless the number is crazy, don't even look at it. It's useless. 221, 224. It's just nonsense. Now, you know how people say VIX is broken? I think this report is broken because it hasn't budged in over a year. Wholesale inventories will be reported today. Europe is giving us a little tailwind, not too much, a little tailwind. China closed higher, giving us a little bit of a tailwind. They replaced our head of securities regulator. I hope they didn't kill him. Japan closed higher, hitting a 34-year high, following indication from a high-ranking bank official suggesting policy tightening would be gradual. You know what that means? It means what I said a year ago is coming true. They're going to start raising rates. Japan, that's why Warren Buffett went crazy a year ago investing into Japan. And I told you guys that about a year ago when it happened, okay? So I'm a little neutral on the market. I'm not as bullish. I don't like what I'm seeing. I don't like the commitment from buyers at these levels. I think there's a lot of red flags. But with that said, we're going to keep doing what we've been doing because it's been working. We're going to keep following the market. Wow, we got 168 people here. It's a record. Congrats. I love it. I love it. So let's go through our stocks. I'm going to do the short side first, okay? Let me just change the template here. Here we go. So you could see the stock is breaking down. It's making lower lows. Um, not a great look. Now, volume is lower, but it's still higher than the average. Be careful here. Be careful. Um, Second stock to the short side. EG, sorry, RRC. Here we go. Some reason it doesn't want to cooperate with me. Hold on. All right, here we go. There we go. Okay, another short right here, RRC. Now, I gave you this stock as my second weakest stock in 2023 for Turning Point. The stock since then has lost about 30 points, and it's now breaking down again. Sorry, Sharab. Sorry that you're leaving the platform. Hopefully, you'll catch us on Zoom in the afternoon. BG, Hormel. Look at that. Nice breakdown. Just need to see a little more volume to the downside. And if any stock is breaking down hard right now, that's a good sign for the bears. Yeah, Chinese New Year's. You're right. I got to go to my favorite Chinese restaurant. I go once a year to there's actually a really good Chinese restaurant in Jacksonville. Another one right here, IRDM. Please keep your eye on these shorts, especially if the market gaps up and if these stocks don't gap up. That's a good candidate. I look at all of them at the open. Look at that, breaking down. You too, Marina. Have a great day. Right here, breakdown. I'd like to wait a little bit longer on this one, but I do like it. Any stock that's weak right now, when the S&P is making an all-time high every day, my pleasure is a good stock. So look at that, nice and firm, and these stocks are breaking down. Now let's talk about stocks that are doing well. Okay, Oracle. Oracle looks like it's starting to fill the gap right here. See that gap? I like Oracle right now. I'd love to see it a little higher. Once it goes a little higher, institutions are going to start nibbling at it again. And it didn't hold well below the 200-day either. So Oracle starting to get into the gap to the long side. S Sentinel. Look at this stock. Had a little breakdown, looking fantastic right now. NVO, one of the 5 stocks that we took a dump on in our trading pit. Look at this thing right now. Looks like it's basing. Looks very strong. And it's a healthcare stock. Visa. Higher rates, more people working. Think about that combination. More people working, right? Remember the employment report last week? Right? More spending. Look at this. Nice. Notice not tech stocks. Even this stock, this is a consumer discretionary stock. Salesforce makes money when the economy expands. Look at it right now. Tech, but not tech. Home Depot, I almost went long. I came this close to going long this stock at the end of the day yesterday. I wish I did. I regret it now, but it's still not too late. Right here, Home Depot and Shop. They both have the same pattern. Nice breakout on Shop and Home Depot. I'll be watching Home Depot today all day. I really wish I took that trade yesterday. Another beauty. Look at this. APH. What a beautiful stock. SPGI. Broke down, hit the moving average, and then bounced hard. Be careful. It has earnings today, so be careful. You don't want to trade this stock today. Builder's back. Remember Builder? We've been talking about Builder quite a bit. Look at that. It's a beauty. Here's a tech stock, a COM. And you might have noticed that we pick a lot of these stocks. Look at this trend. I mean, man, oh man, look at this trend. That's a beautiful stock right there. GD. Beauty. It's a beauty. Not noticed. I don't see a lot of Teslas, a lot of those stocks, and Ferg. Oh, and by the way, let me just say something about Tesla before I leave. Look at that. That is a beauty. I'm picking some really good stocks for you guys today. Now, let me show you something about Tesla. I drew these lines. I drew this line for you guys a long time ago, Tesla, and I said if Tesla comes down to this level right here, it'll more likely than not start coming back up. Here, let me just move that up here a little bit. It looks like it's close enough to that level right now. It may start coming back up. All right. Now, before I tune out, I spent the better half of 2023 developing something very, very cool for you guys. Let me just post this here. And I genuinely do not want you guys to miss out. It's about 3,000 lines of code that tracks institutional buying and selling pressure in real time, giving us real-time signals that actually matter and help people make money. All we got to do is ride the coattails of these massive orders and we can target endless opportunities without leaving money exposed to the markets for too long. That's exactly how over 500 traders have nailed a 95% win rate on over 110 trades. I can't promise future results. The good news for you is that the very next trade drops today. Don't miss out. Join the pit. I posted the link in the chat. I hope everybody has a fantastic day today. And I will see you all in my VIP room at 11 a.m. And I just posted the link for that as well. Have a great day. We broke a record today, 175 people in the room. Love that. Love that. Love that. Love that. I'll see you guys soon. Have a great afternoon. If you have any questions, Roger at rogerscott.com. Bye, everyone.